So I've been putting out a lot of backtest videos, and I realized that if anyone ever finds this channel, they're not going to really understand what I'm doing or how I trade. So I wanted to make a series on how I trade. And I think to do that, we must first start with market structure. There's a million videos about market structure. I probably don't need to make this, but everyone says that market structure moves in a staircase like this. And for the most part, that can be true in a trending market. You can see some of that here, but for the most part, you're not going to get these nice moves that you see here. And most of the time, right, it's going to start looking a little like this, right? It's going to start looking choppy like this. And you're just like, what the heck is going on, right? So I don't know if I'm the best person to explain this, but I will do my best. I'm just trying to find a good spot on the chart. So it really, the way that I look at structure is just kind of the concept of if price makes a new high, it'll probably make a new high again. And if price makes a new low, it'll probably make a new low again. Consider this, that this is an overall downtrend. Like, even if I didn't draw the trend line, you can mostly see that this is trending downwards, right? And so when you have this downtrending structure, right, the way that you want to look at this, or the way that I look at this, is that you have your ranges. And when you make this big push down, my new range is currently from here at the top to here at the bottom. Now, everything that happens within the middle of that is its own range. Okay, so first of all, once you get back down in here and we push back up, well, I would then be like, okay, well, we're probably pushing back up to somewhere at the top here because that's where the push started. But if we don't do that, what do? Well, we push back up and we made this high. And then we push back down and we made this low. So these are what I would call my short-term highs and lows. Okay. Now that's our new current range. And you can get really goofy with this, right? Because within that range, then you have these ranges. So you made these highs and then the same lows. And then you broke above this high, but then you break out of this low. So if you get really goofy with it, you might start to confuse yourself. And so what you really want to do is look for areas of swing point, like swing points or wicks. In a swing point is something like this, or like this, basically the edge of price. Because most of the time, price is going to come to the edge of price and then fill in whatever needs to be filled in. So once we break out of this here, you can see like we're just basically clearing out. What's happening is there's orders sitting under here, and we're just clearing out those orders and then coming back up. And we're playing around basically within this bigger range, right? And so once we do that, we start pushing up and we make this high, right? But we have this low that was made once we cleared out this low. Now, this is where it gets confusing, because right now, the range that we are currently in, remember, our first initial range is based on a bearish structure. So what I tend to do is I tend to weigh the movements of this nonsense in here toward the downside. So even though these short-term highs are breaking, I'm giving more of a bias to the downside. So I'm still trying to assume that until my overall range high breaks, that we're going to put in more lows. So once we break this low, this is my new short-term low. I still have this one down here that I expect to break. But then we go up. and this is where people get confused, right? They think, oh, it just broke above this high here, so it's going to keep going up. And even I do this because it looks massive, right? Look at this momentum to the upside. But we have to remember that we are currently in this giant downward range, giant bearish range. So when we break this low, we just expect this low to be a new low to be put in, ever creeping ever so slightly toward this low. Now the thing about this is that we break this low, but we can't immediately keep going because price doesn't do this thing most of the time. Price does this where it pushes down, does like all this stuff in here, and then pushes up, and then it starts doing what it needs to do. So let me just back up a little bit. When we break a new low like this from here, we need to then drop. If we wanted to clear this new low out, we need to clear it from higher because price needs momentum. It needs the orders. It needs a good price point. Like it's like if you have a sale and people are wanting to get a really good price point, well, the price needs to go up. I mean, it needs to go down, right? Before people have incentive to basically buy that item on sale. Otherwise, it's just like, why do we want this at full price? We got to wait for Black Friday. So basically, I guess what I'm trying to say is this move up is Black Friday for the market, right? And so once it gets there, everyone starts being like, oh, we're selling it, right? So I think I'm just being obtuse and confusing now. But anyways, we broke the slow. We're going up. We have to clear the slow. We have to get some momentum to clear it from higher. So we make this high. Now, once we make this high, because we didn't break above this high, we expect this low to be cleared out because we're still in this overall bearish structure. So then we push lower again. Cool. So that's our first staircase, right? That's the first, like if we were looking at a price, that would be the first part of this. Okay, so we broke this low. Now we made this low. So we're in this range now, from here to down here. And then now we push back up, collect more orders, get a better price point, go up in here somewhere, fill in some of that missing price, right? And then once we do that, now we know that we can probably enter somewhere in here because we're confirming that bearish structure. We could have confirmed it here, but you wouldn't have known where to stop here. You could have probably taken an entry around this, like this area price here, because on another video I'll make, I'll tell you how to see what that is on a higher time frame, but we're just doing structure now. Then from here, you then push out of that range again, making this new low. So now we're in here, right? So now you can see we've made this part of the staircase. Okay, now here's where it gets interesting. Sometimes, after you've cleared a new low, there's too much selling pressure in the market to then bring it back up to these way up here, like these highs way up here. So sometimes it'll retrace to possibly 50% of the range, possibly 30% of the range. It's kind of what the Fibonacci trading is based on. It's based on the fact that you have a range of price, and price will most likely retrace to a certain part of that range. And the golden area is basically like your area of value, where even if, like, basically you want to see something happening in your area of value, and you don't want to sell from under here because there's a higher chance of pulling back. So you don't want to sell from under the 50 because there's a higher chance of pulling back. So people are looking for value in that golden zone, that 50 to 61.8. And so then you get a range like this, right? Where you're now playing, you have this bearish range, but you broke out and made a new low. And now your newer lower high, once this gets confirmed, is here. So that would look something like this, right? And so now, once we go back down, we break below the short-term lows and make this new low. Now, people get confused here as well, but you have to then look at the fact that the other short-term highs in here, like this one or this one, didn't get broken, right? I know this would be kind of late to look at here, but when price comes up and makes this engulfing candle here, you want to look at these short-term highs and be like, okay, what was broken last? Was it lows that were broken last? Was it highs? How many lows did we break? Well, we broke these short-term lows, these short-term lows, and these short-term lows. So, and how many short-term highs did we break? Well, I guess we broke these short-term highs, and possibly if you want to call these, but that's not really it, right? We never broke a high since even being up here, right? This doji wick that never got broken. I keep drawing that awkwardly, but you know what I mean. So then you just have to assume that, okay, price is mostly bearish. We haven't broken any lows in a while. It's been a long time. So that means that when you see some kind of engulfing pattern at our zones of interest, then you can take the trade. If you see a double top that fails to break the high again, you can take the trade, right? And there's a theory that I'm trying to come up with called the rule of three, where if something fails to happen 3 times, then that's probably the moment that things are going to pop off. So basically how we failed to break this high 1, 2, 3 times, and then this is the time that it popped off. I probably didn't explain that well, but that's because we're just going over structure right now. Anyways, we come up here and we fail to break any highs, and then we push back down, and then we still fail to break this low. That's another confusing point, right? But here's the thing, right? And let me just draw out the structure so we know where we're at. This was the 50%. Now we've done this, we've done this here. We've pushed in. We've pushed down to our equal again. I'm gonna delete this drawing here because I think it's helpful to know like kind of what we're looking at in terms of when people draw these staircases. So, you know, we pushed down there and then we're doing this. We're down here, right? Now we have one more push. We consolidate here and people get confused. But the other thing, we still haven't broken any highs. If you're talking about short-term highs, we didn't break this high. So if this high doesn't break, you're not bullish yet. Because we've only broken lows. Ever. Like for a while. Right? So then we come up, we fill in some more missing price here somewhere, do whatever, and then we make another engulfing. You could enter again there if you want to. You could enter on the top of this with the stop loss up here if you want to. It's just, you have to understand that we're bearish when we're doing this. And I know I can see the future, but it's good to explain. And so after this retest here, we still haven't broken a high, and then we start pushing down again. Right? And then we make a new low again. So now we're from this range to this range. So here to here. Okay, cool. Well, now what do? Now we push up a little bit. Boop. Right? We do this again. We push down a tiny bit, and then we push up, making a double top and failing to break that high again. And then what do? Well, make that happy meal and break out again. Now, all of this is happening differently on a higher time frame, and I bet if I go to like 15 or something, it'll just look like nonsense. But basically, that's all just like one push on this higher time frame. And you can see like we started reversing shortly after that, and that could be from another area to the left or whatever, right? There's some order sitting somewhere pushing this back up. Someone with a lot of money is deciding he doesn't want this to go down anymore. Okay, so now we pushed out here. Now here's where it gets interesting, right? Because we then push up a little bit into the zone here, clear out the lows, clear out the final lows. Okay, so that looks something like this. Whoop. And then we make what I've been taught is a quasi, right? So then we do this here. And so this happens at every single turning point of the market. And so we're still not bullish. No, sir, because this quasis can turn around at any time. You are not bullish. No, sir, not at all. But once you break these short-term highs, and then you start making this like bullish momentum here. Like basically if you entered somewhere on this pullback for a buy, that would probably be a safe bet. Sometimes price is just doing a really deep pullback, but the thing is, once you break like 2 short-term highs, and then you go and you push up and you break above another high here, that is like, you're late to the party, yes, but you know for sure you're gonna start going bullish for a minute, right? So 2 short-term highs here, and then pullback, and then breaking above this high again here is where I would say is where you'd probably want to start looking at bulls. You can try to catch any quasi, any reversal, but like there's a quasi here, and you would have got clapped, right? So just think about stuff like that. You don't know when the trend is going to stop ever. You have an idea, but anyways, so market structure. We push up again. Now, I didn't draw out all of my short-term highs, I don't think, but we're going to push past this happy meal, and then we push down, right? And that rejection is, of course, probably from around this area here, somewhere in there. And then basically we push down, we retest off of our happy meal. So let me actually erase some of this because we're actually retesting here. So retest off of our happy meal, and then we start pushing up again, right? And so I'm drawing all this just to illustrate a point that price doesn't move in a staircase, and we just have to look at price moving within ranges. So instead of viewing this as like overall structure like this, just view this as this is range 1, this is range 2, range 3, and then within that you have that same type of movement because price is fractal and it just moves within itself. It's the same thing on every time frame, just doing it on either smaller or larger time frames, all within itself, all just churning, collecting orders, doing whatever it needs to do. So then we go here, and then we push up, right? So it's this here. We test off the happy meal, we push up past this high, push down, testing off of this, and then we push back up to these highs over here, or here, I guess. Right? And so that's kind of how I view market structure. It's just ranges within ranges. Just basically breaking, if we break lows, we expect more lows. If we start breaking highs, we expect more highs. It's I hope I wasn't extremely confusing with this, but if I am, let me know. I'll remake this because I know I like to go on tangents and ramble a lot. There's a lot to explain. But I'm trying to give people a clear picture of what I'm doing when I'm backtesting. So this is the market structure video. Hopefully it was enjoyable.